Hello, my name is Jason Ramos, and I'm with DayTradingFearless.com. And this video series is going to be the psychology of trading, learning to trade without fear. Okay, what you're going to learn is how to trade without fear while trading the markets, and understanding and identifying your trading emotions. So pretty much about 70 to 80% of trading is actually emotions, and about the other 20 or 30% is actually more of learning technical analysis and all that. A lot of traders either have the fear of pulling the trigger, or they're going to have the fear of getting into trades. What if I'm wrong? And then there's also traders who have the gambler mentality where they'll just trade left and right and over trade. So we're going to kind of touch on all these aspects throughout this video series. So first off, again, welcome. My name is Jason Ramos. A little bit about who I am. I've been trading the markets for the past 15 years. I trade stocks, options, and futures. I've also done Forex. I've worked for an online brokerage for about 6 years. I have my own mentors who've taught me how to trade and all that. And I've just gotten to the point to where I want to pass my knowledge along to you, the new trader, maybe even advanced traders. Maybe you might learn something. Maybe a couple of the things I say will trigger something inside you, and you'll actually become a lot better trader. And we don't always think about the right things. So hopefully this video will help you in any way. Okay, so next is, and this is kind of what we're going to go over, okay, in this series. We're going to go over the understanding, okay, of psychology of trading the markets. Okay, we're also going to go over understanding and identifying your trading emotions, fears that overcoming trading fears and bad habits that come with trading. I'm going to give you a lot of tips and tricks to change the way you look at the markets, okay? Because the markets are all perception. One person might see something bullish, the other person might see something bearish, okay? So everything is about perception. And then finally, learn how to leave your emotions out of trading. So let's get started, okay? And let's first touch on trader types and personalities. Okay, so first off, what type of trader are you? Okay, and that's kind of one of the most important things is you need to identify what type of trader are you. Okay, and these are the different types of traders, okay? Different personalities are different things. Maybe you have a full-time job, you can't day trade, you don't want this to consume your life, but you want additional income. So there's many different factors. But first off, we have the day trader / scalper. Okay, the time frame this person trades is within seconds, minutes to hours. Looking for intraday trading moves based on technical analysis, and you're flat by the end of the trading day. Okay, that's what a day trader or scalper is. Next, you have a swing trader, okay? Your time frame, you're in a stock or a future option, whatever, for maybe a day, 2, 3, 4, 5 days, maybe a week, 2 weeks, maybe even all the way up to 1 to 3 months, okay? What you're doing is you're looking for bigger moves in the marketplace and place trades based on technical and fundamental analysis, okay? For a couple days, couple weeks, that's going to be more pure technical. If you go a couple months out, that's going to be where you could potentially add in the fundamentals. Next, we have the long-term trader. Okay, your time frame is anywhere from months, years, to even decades. Okay, what you're looking for are big moves and place trades based on technical analysis, but mainly fundamentals. Okay, the reason I say mainly fundamentals is because technical analysis, things could change on the chart on the dime. Okay, you have a big drop, all of a sudden the chart's very bullish, and then something happens to the stock, and now guess what? It's actually a bearish looking chart. Okay, so it could change very quickly, but the fundamentals might still be there. Okay, so even though the stock drops and the chart's bearish, you might still have a long-term fundamental. Something, I'll give you an example, is Netflix. A few years back, Netflix went all the way from $10 all the way up to, we'll say, 300, dropped all the way back down to the mid 50s. And then the fundamental story was always there. It was just more of a technical reason for the drop. They kind of went through a little rough patch. But now the stock's well over, what, $500-600, okay, on a split adjusted basis. So lots and lots of different ways to look at it. So, but this is something that you need to do, and that's to identify what type of trader are you. Okay, so really sit there and think about it. Are you a day trader / scalper where you want to be in the market for a couple minutes, couple days, or a couple hours, right? You want to be flat every single night, so when you go home, you don't need to worry about something happening overnight, market risk, anything like that. So maybe a CEO gets fired or earnings come out. Okay, day trading is the way to go, where you're in now, you're looking for very small micro moves. Then you have the swing trader, where you'll hold stocks for maybe a day, a couple days to a couple weeks, even as long as a couple months. You're looking for bigger moves. Okay, and then finally, we have the long-term trader. This is maybe if you're like, let's say you work full-time, you don't have time to watch the markets every day. You just kind of, hey, let me buy Microsoft 401ks, let me buy mutual funds, ETFs, stuff like that, and you're looking for big long moves, okay, where you're holding for months, years, even decades, right? Maybe you bought Microsoft and you want to hold it for the next 10 years, or Apple, because everything that they're doing, you believe in the company. And look, 10 years ago, Apple was probably at $8, actually maybe a $10-15 stock. It's now, what, $800-900 on a split adjusted basis. So that's another way of looking, but that's going to be more for the long-term trader. Next, we have, what type of thinker are you? Okay, and this is also very important. Okay, for myself, I'm a Libra. Okay, and if anybody who follows signs, I'm a very true Libra. And what I mean by that is, one of the characteristics of a Libra is we balance the scales, right? We look at both sides of everything. So that's kind of one of my downfalls, is I look at both sides, and it creates indecision sometimes. So these are fears or issues I've had to overcome throughout the years. I'll look at a stock, hey, I like the bullish side, but then I'll always kind of look and see what the bearish side is, and then it's difficult for me to kind of create that trade. It's taken me many years to overcome that, and to just say, hey, see the trade, say the trade, place the trade, right? So that's what type of thinker are you, okay? And let's dive a little deeper into it. So, are you the glass is half full type of thinker? This is the person who's a positive thinker. Okay, you think about how much money they can make. They're always looking on the positive side. They see the bullish side of the market all the time, okay, they're usually a perma bull, meaning they're always bullish. Even in a bear market, they're always bullish, okay? You'll see a lot of analysts like this that go on TV, CNBC, Bloomberg, where the market's falling and they're always looking to buy the pullbacks, not realizing, hey, maybe something's really wrong with the market technically. So what happens is they keep buying, okay, or they're always looking for the market to go up. And I think they tend to forget the market's two sides. It goes up and it also goes down. So currently, as I'm filming this, we're actually down about 12% from the all-time highs, okay? And the market is starting to do a lot of volatility, and I still listen to people talk about how you got to buy this market. We're going to 2,300 by the end of the year. We're in October, okay? You have a lot of overhead supply. It took 8 months, okay, where we had sideways action, and then we fell about 250 S&P points, and everybody thinks we're going to go right back up and blow through. Doesn't work that way, especially in this type of market environment. Now, next you have the glass is half empty type of thinker, okay? This is the negative thinker, okay? This person thinks about how much money they can lose versus how much money they can make, okay? That's a very big psychological thing that a lot of traders don't even realize that they do, but the professionals like your Carl Icahns, all these big money guys, okay, they're never thinking about, oh my God, if I place this trade, I'm going to lose this much money. They're actually saying, hey, I believe in my thesis so much that I'm going to put my money where my mouth is, and this is going to keep going higher. Okay, and they're actually always thinking of making money versus the thinking of not making money. So they so maybe next time you're kind of singing from your trading screen and you think about this, okay, go hold on, kind of realize if you're thinking positive or negative. And then usually the glass is half empty trader is usually a perma bull. Okay, they're always looking for the bearish side. They're always finding reasons for the market not to go up. Okay, just like the positive thinker is always looking for the market to always go up and never down. Vice versa. You can if in the perma bears usually get hurt a lot longer and harder than the bull because the markets are just mainly a bullish thing. They might go up for 4 or 5 years and then lose everything in a couple days, right? A couple of weeks, months, and then it's over. That's it. And then we start to make that grind back up higher. And then finally is you have the bullish bearish thinker, right? This is a directional thinker. They're maybe not a perma bull, or they are, and same with the perma bear, right? So they're actually able to see both sides and also understand both sides of the market. Understand, hey, I'm going to look at the technicals too, and I'm going to do what the charts tell me, not what I believe the markets can do, but more of what are the charts and what's the stock market, okay, or futures market telling me. And when you start to think that way and you let the charts tell you where the market's going, not people on CNBC or Bloomberg or any of these analysts, okay, because half the time they're all talking their own book. But when you actually look at charts, draw trend lines, hey, we bounced off a trend line, I should be bullish. We broke that trend line, I should be bearish, okay? I guarantee you, you will become a whole lot better trader and trading will become that much easier for you. So that's it for part 1 of the psychology of trading, and get ready for part 2 in the next video.